Hello, my name is Caroline Rhéaume, and today I will be speaking with Sophie Lalonde about a strategy that may be considered by investors, especially when the stock market is volatile. So, Sophie is a portfolio manager, financial planner, and founder of 3D Financial. Hello, Sophie.
Good morning.
So, Sophie, considering everything that is going on now, I know that many people, when they're looking at their portfolio investment, they're kind of saying, oh boy, what should I do? Should I buy, sell, hold? So, what would you tell investors?
To be honest with you, time in the market is a little bit of a sucker's game in the sense that you'll never get the top or the bottom. The market right now are discounting two schools of thought. On one hand, you have a lot of company going bankrupt, a lot of unemployment, and you're seeing a recession. So that's one side. And on the other side, in this case, this particular recession was actually government induced. So people believe that once we find a cure or some kind of vaccine against the COVID, that everything's going to come back to normal. You're going to have a lot of growth and life goes back. So there's great opportunity. As a portfolio manager, you actually have to take away all this noise and look more as how is the economy going to look like in a year from now, like in 2021, 2022. And when you look at that, what you're looking at is we believe that there's a lot of internet, a lot more FaceTime, a lot more virtual reality, healthcare, and so forth. And these particular companies are quite pricey. On the other side, you have all this sector where the companies are quite cheap, like the energy, the discretionary companies, where you're looking at it and going, it's quite cheap, but you're not too sure if they're going to see the light of day. So it makes it a little tricky as to where exactly you should position yourself.
Yes. So, yeah. And when I think about it, yeah, if I'm kind of worried about losing my capital, should I avoid like long-term growth companies, considering the fact that they seem to be a little pricey currently?
Well, instead of just avoiding them, I wouldn't do that. What you can actually do is you need a little bit more creativity right now. So what you can do is what we call short of put against cash. And let me explain a little bit. Let's say you have a company that you like and it's trading at $100, which you find a little pricey. But that being said, you're quite comfortable at $80. So instead of waiting on the sideline and going, okay, well, as soon as it drops after a correction or whatever, I'll buy it. You can actually short a put, get any premium from 6 to 20%, so get paid for waiting. On the other side, you're guaranteeing that you're going to buy it at $80. The great thing about this strategy is it actually brings in a certain amount of discipline. Let's face it, as investors, we're our own worst enemies. When the market goes down, we keep on looking at the stock and going, okay, I should buy it, but no, it might go down. Maybe they know something that I don't. I start worrying. I'm not too sure if I should buy it.
Yeah.
The stock going to come back and it starts going up, and then you're chasing it upwards, right? So you end up buying high and selling low. By doing this strategy, you're actually giving yourself a discipline.
Yeah, but you were explaining there is a premium or an amount, and you were talking about a range between 6% and 20%. But there's a big difference between those two amounts. So how is this amount, this premium, determined?
Well, obviously, that's a good point to bring up, right? The more premium that I receive, the higher my return, the higher my risk. More often than not, on the other side of your trade is a institutional trader, and they're not stupid, right? So if they're giving you a very large amount, it's either you're very close to the price, the time is very far away, so you have a lot of ambiguity as far as the value of the companies, or there's a lot of dispute as to valuation of the companies. So you have to keep that in mind. It's very important that you choose a company that you really like, that you're comfortable with the pricing, and that you keep the cash in hand to be able to buy it.
Okay, so it's not just a question of price. Basically, it's more than that. So, but when you're talking about this strategy, well, considering the fact that the market is volatile, should I just sell all my stocks and then just decide to go ahead with this strategy instead?
A lot of people have a tendency of thinking that, right? Because you have a downside protection, I got an upside return. So I have a tendency of going, okay, well, I tell you what, why don't I just sell everything? After all, there's probably going to be a correction. The market is expensive, so let's do that. That's actually an added strategy. Life is a balance. So is your portfolio. You should never do everything one particular type of strategy. So you have a lot of long-term, strong companies with large dividends that keep on growing. These are your core holdings and you should keep them. You're not going to use
Okay.
option for those. Option is a great strategy for a market that is volatile, for growth companies that you want to own and that are just too pricey right now. So it's a great way to stabilize your portfolio and increase your return, but it is not a core strategy that you need to do.
Okay, and can I do this by myself? So can anyone trade these option strategies or?
You actually need special licensing for options or for any derivative for that matters. I mean, these strategy, we're talking about one strategy particular, which was shorting the puts, but there's so many strategies you can do with options. And the truth is they can be quite complicated. If you don't know what you're doing, you can actually burn yourself.
Okay. So, but and if I want to know more about this, where can I find additional information about this topic?
Well, as you know, we've already done a video where I walk you through an example. So that's one way of looking at it, more information. We do have pamphlets that we can send you if you're interested in it. But the best way to actually understand options, believe it or not, is actually to do one strategy, put it in your portfolio and look how it reacts. That being said, I would strongly recommend that you do it with a professional, not by yourself. So you make sure that you know the exposures you have. Like I said, options are a great way to stabilize and increase your return, but it actually, if you don't know what you're doing, you can actually burn yourself.
Okay, and that would be my case, so I wouldn't do it by myself. But that's a great strategy. That's very, thank you very much for sharing this strategy with us today. That was very informative. So, anything you would like to add before we just conclude the presentation, or?
No, actually, this is great. And if you want more information, like I said, you can always look up on our website or just send us an email. We'd be more than happy to help you out. And this market right now is volatile. And it's actually a perfect timing to do these type of strategies because, like I said, once in a while you have a market that really discounts extremity, which is the case right now. So this strategy gives you great returns and yet also gives you great protection on the downside.
Oh, great. So thank you. So this concludes my interview with Sophie Lalonde, founder of 3D Financial. So thank you everyone for listening and have a great day.
Thank you.